Good morning. Thanks so much for being here. We are going to get started in just a few minutes. We really appreciate you spending part of your time with us. I'm Julie Hartman with B2G Victory, joined with Brendon Boyd with Tower Insurance. Go ahead and as we wait for 11 o'clock, put your contact information in the chat and we can use this as a networking opportunity. Once again, we will begin in just a few minutes. Good morning, everyone. It is 11 o'clock, and we are thrilled to have you join B2G Victory and Tower Insurance for our bonding and insurance basics session. I'm joined here with Brendon Boyd with Tower Insurance, and I'm Julie Hartman with B2G Victory. Thanks again for joining us, and we've got an hour packed of information specifically focused for small businesses around bonding and insurance. Thanks all of you for putting in your bonding and insurance headaches or heartaches or heartburns when you registered. And we have focused the content today around answering your specific questions. We've broken our session today into 4 components about understanding insurance requirements, correct classifications, bonding and insurance headaches, and how not to outgrow your policy as your business continues to scale and grow. Our subject matter expert today is Brendon Boyd with Tower Insurance, and I'm going to let him introduce himself and tell you a little bit about how awesome he is. And I'm a little bit biased because he's also our insurance guy.
Well, Julie, thank you for having me today. I'm very happy to join everybody. I'm the principal agent and owner of Tower Insurance and Financial Services located in Pearland, Texas. I've been an insurance broker slash agent now for about 18 years, and I specialize in all things commercial insurance related. My area of domain is the small business world. So I'm working with small businesses that are typically anywhere from 10 to 25 employees or less, more times than not. Sometimes I come across some companies that are larger than that. But I am based in Texas, but licensed in the states of Louisiana, Maryland, as well as the state of Georgia. And I'm always working with a lot of businesses that are contracting through larger public and private entities. And insurance questions, particular to the requirements, as well as bonds, whether it be bid bonds, performance bonds, etc., are always a hot topic of conversation when I'm getting those different emails and phone calls. So I'm happy to be here. And again, I look forward to sharing as much as I can on these different areas and topics throughout the session that we have today.
Thanks. And we're small businesses just like each and every one of you.
Yep,
So we
that's
want
right.
to make sure that you're in the circle of trust. There's no crazy question. Trust us. We both have been asked probably one or two of them. But this session is for y'all. And B2G Victory is founded by two women who have been in the government and contracting space for over 2 decades. Myself, Julie Hartman, as well as Susan Repka. And Susan's actually teaching a hub session all day today. And we want to make sure that all of this great information is available to y'all at your fingertips anytime, right? Sometimes as entrepreneurs, we might work on a Saturday afternoon, possibly, or even late on a Tuesday, Wednesday, or any night. So give us a week. We're going to take this session recording and then go ahead and post it up on the B2G Victory YouTube channel So you'll be getting an email from us within a week with the session recordings as well as other great helpful information that we're going to cover today as well. Um, so, wow, Lamarcus is already starting us off with a question. Um, on he'd like for us to chat about tips on researching and deciding on insurance, when you're in a startup stage. And that actually leads us into our first question about kind of understanding insurance, requirements. And Lamarcus, thanks so much for your question. And I think deciding on what type of insurance you need depends on kind of what type of work you're going to do and what those insurance requirements are. Obviously, there's a minimum amount of insurance that you're going to need. And we see that a lot in RFPs or RFQs. And here's just an example right here on the screen of an actual RFQ that talks about what those requirements are. And so there's one example, and here's another one. So when you're starting out, understand the scope of work that you're going to do, and then understand what those requirements are. So Brendon, how does somebody just even kind of start navigating that?
Well, I think the insurance requirements is a good starting point. Um, and I would say that to say, figure out what's going to be required for you to do business with the companies you desire to do business with. Secondly, I would say have a conversation with an insurance professional about your actual exposures because that's going to vary from company to company, industry to industry. A consultant doesn't have the same insurance exposures as a plumbing contractor and vice versa, right? And then the other thing I would say when it comes to purchasing insurance for your business is I like to use a Olympic analogy where Olympic medals are gold, silver, bronze, right? Now, the bronze in this insurance analogy I'm using is going to be what is a basic form, fully adequate type of insurance that a business can buy for itself. The silver and gold packages or silver or gold levels, those are typically going to be the levels of insurance you're going to need if you're now contracting your products or services through a larger company or public or private entity, right? So you're going to have to step it up to a higher level. But that's where you kind of start at is understanding what are your insurance requirements and what are your insurance exposures particular to your industry, and then what package can you afford and what package do you actually need from an analogy standpoint. And the general liability insurance doesn't cover everything, but general liability insurance is always a minimum when it comes to insurance requirements. It's always going to be in there. It's just going to be one of three or four, but the general liability is always going to be a part of it. And the general liability doesn't cover everything, as you can see with the slide here on the screen. Now, one of the things that stands out on this slide that I think is really prevalent to the session today is a bullet point towards the top half and another bullet point towards the bottom half because where you see your personal and commercial property, that's not a part of your general liability insurance. So that's important to know because some businesses have insurance requirements that are pretty much very much focused on the liability and workers' comp side of things. However, that doesn't necessarily mean they're covering all of their insurance exposures because your insurance exposures and the insurance requirements are not one and the same. They're definitely very correlated with one another, and you have to meet the insurance requirements to be in business with said company. But you also want to understand your exposure so that you're protecting yourself adequately. And then I think the third or fourth bullet point from the bottom says professional services provided to a client. Now, our consultants are typically would fall within this category. So if you're a consultant, you're typically not providing a tangible product or service. And what I mean by that is a tangible product would be a business that sells a product that you can touch and feel with your own hands. A tangible service would be someone who is a painting contractor and you can actually literally see the paint job that they did on said wall or said building, right? If you're a consultant, your work is being rendered in the form of professional advice, expertise, paper, intellectual insight, right? So you're going to need actually professional liability to adequately insure yourself and properly insure yourself from an insurance exposure standpoint. However, that may have nothing to do with the insurance requirements. So there may be a general liability insurance requirement that you still have to meet if you fall within that professional white collar space as a business. So I hope that made sense, Julie.
Yeah, I think it does. And that leads us into when you're looking at, what is that minimum amount?
Hmm.
You
Hmm.
can help direct someone to say, okay, what are you looking to do? What type of space are you in? And then
Right.
what is that minimum amount of coverage? And just like you talked about the general liability and then the professional liability. So the scope
Oh,
of,
something else I wanted to just chime in because I felt like I overlooked one of the questions that was in the chat earlier because somebody said something about when do I get insurance or when should I start, right? My advice on that particular question, which I hear asked a lot of different ways, is when your business is generating revenue, that's when you need to get insurance. Because your insurance cost is going to be predicated on either your payroll or your sales or revenue, right? It's going to be one of the two, depending on the insurance company that's offering you a quote or the type of insurance that you're buying 9 times out of 10. So when your business is generating revenue, you need insurance because it's nearly impossible that if you don't have a business yet that's operating and generating revenue, well, how can you pay for the insurance? Because it just becomes another cost of doing business, essentially, in that respect. So you have to be operational. It doesn't mean that you have to be already generating revenue of 1 million or $10 million, but you need to be generating some revenue and be quote unquote in business and operating. So I hope that answers that question for that person that asked that.
yeah, thanks for grabbing that. So in summary, how early should you get insurance? Pretty much almost after you send your first invoice, right? Because you don't want
Right,
to have that
right,
risk exposure for either you, your team members, or your customer.
right.
And then also circling back on, how do I find out what my minimum requirements are, or what is the minimum amount of insurance? There are a couple of different places that you can go to look for that on an opportunity if you're doing government contracting or with a large corporation, or call you, right? And say, this is what I'm doing. And you can help direct people with
Yeah,
if they're
absolutely.
painting, if they're an architect, if they're a trainer, if they're consultant, all of the different things.
Hmm. Yep.
Perfect. Which I think leads us right into the next thing about the certificate of liability insurance, because once you're in business, your customers, regardless of who they are going to ask for probably proof of insurance,
Hmm. Hmm.
right?
Yeah.
And that's also commonly called either a COI or a certificate of liability insurance. So walk us kind of through what that one-page document looks like, and then as a business owner, how would somebody read that?
Well, I would put it this way. You don't need to know everything about this certificate of insurance. You just need to know enough. Whoever your insurance agent is or broker, he or she should know this thing from top to bottom and know exactly what every section pertains to and what it means, right? So let's start with the first section. Going back to what I said a little while ago, the baseline is always going to be the commercial general liability. That's always going to be there. So the commercial general liability is what protects your business in the event you're found liable through a suit for the injuries of others or the damage of property of others. In plain vanilla language, that's what that means. So you have these different limits of insurance within your liability, your general liability. But without kind of getting lost in the weeds, you're going to have an aggregate limit, which is typically going to be around $2 million. So if you have multiple claims in a single policy term, the max payout from the insurance company is $2 million. If you have a single claim, the max payout is going to be $1 million if the aggregate limit is 2 million, 9 times out of 10. So that's what that does is protect your business against lawsuits. It has nothing to do with the value or revenue of your business, whether or not you make $1 million a year or gross $1 million a year. It has nothing to do with that, but it has entirely to do with what you are potentially or hypothetically found liable for if someone is injured or someone's property is damaged through the operations of your business. And then the section below that has to do with vehicles. So your general liability insurance is not going to protect your vehicle. So if you have a commercial vehicle or a commercial auto liability requirement, that's going to be buying a policy on a vehicle. Now, oftentimes, what I see happen is that sometimes small businesses have personal auto insurance. Their
Mhm.
wife, maybe teenage kids have personal auto insurance, right? So that takes care of that. But even if you don't have technically a real commercial vehicle, you don't have some heavy duty truck, some type of Mack truck, tractor trailer, or big box van, even if you don't have a obvious commercial vehicle, you may have to move your vehicle from a personal auto policy to a commercial auto policy because that's the only way you're going to be able to meet this requirement. Your personal auto insurance company is not going to be able to meet these requirements with the different boxes that are checked and the limits of insurance that are required, and even the language that is listed below in the description operations section, right? This is a whole nother separate can of worms from personal auto. So understand that. And then the section below that is your umbrella or excess liability coverage. That is just a blanket of liability protection at said limit that blankets above the vehicle auto liability and blankets above the general liability. So how it plays out if your excess or umbrella liability coverage is ever triggered is that would only happen if your limits of liability in on your general liability policy or your commercial auto liability policy are first maxed out. So if you have a aggregate limit of $2 million and then a per occurrence limit of $1 million, then it's only once either of those limits are maxed out that you have the additional 1 million, 2 million, or 3 million of excess or umbrella liability coverage that is now triggered in that type of instance. So you're usually, hopefully, you're usually not going to have to use your excess liability coverage, but it is still there to protect your pockets because even in the court of law, I'm not a lawyer, so I'm not going to say too much about this, but just because your insurance policy has maxed out doesn't mean that that attorney representing the other side is going to call the dogs off and not continue to be aggressive in the courtroom and getting his client more paid damages, which means if there's not insurance to pay for those damages, your pockets are going to pay for those damages, right? So the excess liability coverage is important from that standpoint too, because it's an extra layer of protection and your business is everything to you. Um, and I'll pause
This
there
is
before I
so
go.
super important. So super important.
Yeah, because the other thing I say to clients all the time, especially the ones that have left their 9 to 5 and they are 100% full-time business owner, full-time entrepreneur, is I ask them all the time, hey, if you have a lawsuit that cleans you out financially or cleans out your business, what is how is AT&T or Coca-Cola going to help you? And I asked that question intentionally because they're like, well, I retired from AT&T 2 years ago. So that means they're not going to help you because you don't work there anymore. So there's not going to be a source of income coming from somewhere else to now make up the difference for what financially adversely affected your business, right? And that's what is always key is protecting your business against lawsuits. People often think about protecting their business in the brick and mortar form in terms of where they operate, but liability lawsuits can get very, very expensive unexpectedly. And then the next section below that is workers' comp. So Texas is one of those states where you're not required to carry workers' comp for your employees. It's not a requirement. It's not a state law or anything of that sort. However, these larger public and private entities know that if they hire you for a job, you have employees that are going to carry out the work, they may get injured on the job. And they don't want to be sued, which means they want to make sure you have workers' comp insurance so that if you have an employee that is injured on the job, then he or she can be compensated in terms of their medical bills and lost wages and all those things of that sort through your workers' compensation insurance. And that's another way to protect you because even though, again, you're not required to carry workers' compensation insurance in the eyes of the state of Texas. It's not a requirement. But if you have a worker that is injured on the job and you don't have workers' comp insurance, uh, that doesn't stop that worker from having an attorney on their side that takes you to court and financially gets the compensation that they're seeking. It happens all the time, especially if you're in a trade or construction, because I have a client that previous to them working with me, they didn't have workers' comp insurance and they had a job that was outdoors and their employees were outdoors and there was a level of danger involved in it. To make a long story short, a huge piece of lumber hits a guy on his head, even though he has a construction or work helmet on to protect him. He is injured and out of work for weeks. And then I guess there are some lingering issues that it turns out to be months long issue. Somebody gets in this guy's ear, says, well, you need to call an attorney because you should be getting paid since you got hurt on the job. And the whole lawsuit ensues from that point once the attorney gets involved. And there was no workers' comp insurance in place at that time. And that business owner kind of learned a hard lesson in the worst way with that situation where it didn't stop the worker from getting compensated because of what had happened to him on the job. So moving on to the next section, I can't really quite see it. Are we going to cover that next section or what?
Cyber. Cyber. So just
Cyber.
wanted to talk
Okay.
briefly
Cyber.
on cyber, since that's a pretty
Right.
big word these days. And I think a lot of people think, well, I'm not in IT, right? I don't either
Right.
do
Right.
IT brain stuff or run IT cables or what have you, or provide
Yeah.
computers, and I don't need cyber. But we're seeing that like more and more as a requirement, either from prime contractors, from government agencies. So if you could help us understand a little bit about cyber,
Yeah.
because it's kind of a scary word. It can be a little bit of a scary word, kind of like workers' comp.
It's becoming more and more of a problem. It's actually been a big problem as far as cybercrime for several years now, with the leaps and bounds that the internet has taken off, and now you have
Yeah.
AI that is moving at warp speed.
Mhm.
So it's very easy to fool and deceive people and commit cyber crimes, right? So cyber liability, to keep it very simple, yeah, first party and third party coverage. The cyber liability part first starts with the third party coverage. This is the sort of coverage that protects your business if you're liable for the financial harm that someone else experienced due to the data breach that originated with your network or system or with your company, right? So I could have something happen where someone's information, financial information, personal information becomes compromised because of quote unquote poor handling with my systems and my networks, right? So that financially harms them. I'm now liable for it. That's the third party portion of the coverage. Now, you also have the first party portion of the coverage when you're talking about cyber insurance, where you're financially harmed because you or someone on your staff has been duped or fooled into sending
Mhm.
sensitive information to someone that is not who they appear to be in that email, or paying a fake invoice where that fake invoice was from a cyber criminal. You know what I mean? So now you've been financially harmed. So there's all kinds of scenarios and things that can happen, or you experience a cyber breach and your network is severely damaged or paralyzed, and now you have a ransomware or some type of ransom that's being asked of you. So that's financially harming your business. That's still on the first party side of the coverage. So to keep it simple, that's what you're looking at and dealing with. So even if you don't have a technology related business or industry that you work in, you still probably have a cyber exposure that the easiest way to address it to some degree is some companies will offer cyber liability endorsements onto your general liability policy that you can purchase for an additional premium. And that additional premium is actually pretty affordable. The numbers I've seen for that type of endorsement to be added to your commercial general liability policy, and that's if it's available, and I emphasize if available, that can be as little as $15 to $25 a month in terms of the cost of that type of endorsement. So it's not going to give you the full course meal of a cyber policy, but it'll give you a little bit of something where you do have some type of protection. And then, Julie, are we going to get into endorsements? Because that's really prevalent on that bottom section of the COIs too.
Yep, yeah, we can. Um, we've got a great question that I want to kind of
Okay.
circle back
Okay.
to on workers' comp, and then we can do endorsements because yeah, I think that's super important.
Okay.
So we have a question about I have professional liability and general liability as a sign language interpreting agency. All of her workers are 1099. The only W-2 employee is myself. I have a separate auto insurance, and my workers provide their own transportation when traveling to jobs. Do I need to provide workers' comp to myself or for my 1099 contractors? So that's the first question. The second question is, should I have a clause in my contracts that if they're unable to sue, are we are we not liable for any injuries that occur on the job? Um,
Well,
so
yeah,
yeah,
I'm
that's,
gonna.
that's a big one and unpack it kind of a couple different ways with the clause. We are not attorneys. Um,
Right, right. That's what I was gonna say. I was gonna say I can answer that question strictly from an insurance perspective, not from a legal perspective, because I'm not an attorney. Um, I do know if someone is going from point A to point B in their vehicle, but the purpose of them making that trip is business related, there is a liability exposure to the business, right? So that does exist, that liability exposure. So a business auto uh, policy can be helpful in closing that exposure, or a hired and non-owned auto endorsement on your general liability insurance can be helpful in closing that type of exposure. And then from when you're talking about workers' comp insurance, it doesn't sound like that type of work is very labor intensive. So there's not a huge exposure for injury, but that doesn't mean that there's no exposure for injury. So that would come down to your own risk assessment per se of your business, where you're looking at what is the injury exposure for yourself and others. You can cover yourself on your own workers' comp insurance policy. Now, the other thing about insurance companies is insurance companies identify and label employees in a way that is very, very different from the IRS. So what I mean by that is whether a person is a W-2 employee or a 1099 worker or 1099 contractor, whatever you label them, if they're involved in your day-to-day operations, the insurance company is going to call them an employee all day long. They don't care how you pay them, W-2, 1099. That means nothing to the insurance company. If they're working for you and involved in your day-to-day operations, they are an employee. That's how the insurance company sees it. And I wanted to emphasize that because there is there's a void there, information wise, when I'm talking to business owners, because when they think about employees or non-employees, they're thinking about it under the rules of the IRS code. And I'm not a CPA either, so I'm not going to get off in the weeds of that. But I can tell you for certain, whether you pay this person on the W-2 or 1099, that means nothing to the insurance company. They look at them as an employee if they're involved in your day-to-day operations. The only exception to that is if this is a separate company that you pay a 1099, that you have on a W-2 or 1099 filing with, and they carry their own insurance. If they are a separate company, LLC corporation, they carry their own insurance, then the insurance company will acknowledge them as a contractor and not an employee. But they won't look at John, Mike, Susan, or Mary as a contractor just because you pay them on a 1099 basis. The insurance company doesn't view it that way. Um, but is there any other questions we should get to before the other slides?
yeah,
Okay.
I think that I'll pull up the endorsements and yeah, we can chat about that.
Okay. So let's go back. If you could go back to it should be titled, What is an insurance endorsement? I think it's like
Yep, there we
two
go.
slides back. Right. So this is what an insurance endorsement is in terms of your basic definition. It's an amendment to an existing insurance contract that changes the terms of the original policy. An endorsement can be issued at the time of the purchase, midterm, or at renewal. And the endorsements typically have a cost associated with them. Um, can you go to the next slide for me, Julie?
Absolutely.
Now, a blanket additional insured endorsement, this is a catch-all type of endorsement. And oftentimes with the certificate of insurance or the COI that we looked at, there's going to be language in that COI that is not important for you to understand the way I understand it, but just know it's there and make sure you're working with an insurance agent or broker that understands these endorsements because there's various types. This one is probably the most simplistic and most affordable one because it can be included in your general liability policy at no cost or at very little cost. And what this allows for is this grants insured status to other businesses and organizations that you're doing business with, that you're under contract with. So this allows your liability to be extended to them, but only specific to the work you're doing for that particular company. So it's not like they can just use their insurance in place of your insurance in place of their own, but your insurance will extend to them, particular to the work that you're doing with them or the business you're doing with them. And that's a good thing because again, if something goes sideways in your operations, particular to a contract you're on with said company, you want your insurance to be broad and extensive to be able to pick up situations like that if or when they should occur. So this is one type of endorsement and the most simple and most affordable type. Can you click to the next screen?
Mhm.
Now, primary non-contributory endorsement is another type of endorsement, and it basically creates language within your insurance policy that makes your insurance policy primary and not seeking any contribution from any other policies, particular to the claim at hand. This is an endorsement that I also see very, very often a required endorsement as a part of the overall COI, especially if you're in the world of construction in some way, shape, or form. So this is another endorsement that is different than the first one we just looked at, but it is something that has a cost to it. And it's something that can be relevant if you're in the world of construction. Uh, Flip to the next slide.
And Carlos, kind of chimed in as well
Okay.
earlier, and you know, kind of wrapping all of this back up. So when you get insurance and then you get a client and they ask for the specific insurance requirements, you get the job. One of those criterias might be for them to be listed as an endorsee, right?
Right. They'll want to be the GC or general contractor. We call them GCs. They may want to be explicitly listed with their name and address on the endorsement.
Yeah.
And that's going to be a CG 2037. And that's going to be what this endorsement basically is, because it's going to stamp them on paper and it's going to take care of
Mhm.
any claims that arise from ongoing operations while the job is in progress and underway, as well as completed operations, even once the job and the work has been completed. And this applies to damage to property of others as well as injuries to others, right? So that's what that endorsement means. Um, Flip to the next slide if you would.
Yeah, absolutely.
And then you also have the waiver of subrogation endorsement. You can have a blanket waiver of subrogation endorsement, or you can have a scheduled waiver of subrogation endorsement. The scheduled one, the difference between the two is the scheduled endorsement is more expensive versus the blanket. But the scheduled endorsement is going to explicitly name the company, organization that you're in business with, as well as their address is going to be posted on that page within the policy because the other thing that I want to make sure I don't forget to mention is that insurance policies are contracts. Please, please, please understand that. Insurance policies are contracts, and technically they're called contracts of adhesion, which means that one party writes the contract, which is the insurance company. So the contract has to be amended through these endorsements from time to time, depending on the type of business, the type of industry, the type of contract, the type of agreement that is related to the business at hand, right? All of those things are subjective, or not subjective, but situational, excuse me. So, insurance policies are contracts. So it's important for business owners to have a general understanding of the contracts that you're purchasing. through purchasing insurance policies. And I don't expect a client to know what I know, but have a general understanding of it. And if anything, make sure the guy or gal that you're paying to be your insurance agent, he or she has a good understanding of this type of stuff. Nobody knows everything, but if what I'm talking about today during this webinar is completely over the head or making the head spin of your insurance agent or broker, well, you may need to consider some other alternative options in terms of another agent or broker, because if they're specializing and experienced in the world of commercial insurance, they should understand all of this stuff that we're speaking about today as an insurance broker or agent, because this is the day-to-day work that you do. So have these conversations with your agent um, uh, whenever you can. It's a good thing to have these conversations before anything ever happens, versus something happens and now you're having these conversations and you're maybe getting some bad news or disappointing news about your situation.
And I think that leads us right into kind of the correct business classification. And this
Yes.
is all kind of tying all
Right.
together is when, I'm looking to see workers' comp coverage and
Hmm.
all of that, as well as, what is the scope that I'm doing. And these are just some examples straight out of, scope examples from RFPs and RFQs. And this might be, Greek to
Yeah.
some of y'all, but it goes down to, what exactly are you doing? So one of the things that y'all will get from the session today is the insurance questionnaire. And that comes up, right? What exactly are you doing?
Yeah.
So we've got a great example of an electrical company, and understanding the difference, because depending what you do depends on your price of insurance. Absolutely. And that's all, goes down
Right.
to the bottom line.
Right, right. I'm gonna explain this slide and then I'm gonna unpack that even further, because there's so many different trades and professions out there. So with electricians, you can have electricians that are doing a scope of work where, let's say, a house is being updated and they're updating the wiring within that house. So the walls are being opened up, they're replacing the old wiring, putting in new wiring, right? So that's going to be an example of that first class code. So for some electricians, they're doing that, let's say 95% of the time. They're changing out plugs and sockets and all that stuff that is tied to the wiring in the home, uh, as well as maybe electrical fixtures that they may mount and install, right? Now, electrical apparatus is a different class code, and that is going to have to do with more heavy duty electrical equipment that you are installing, servicing, or repairing. Maybe it is a major generator of some sort, where the reason why it has a separate class code is because if you do something improperly with certain types of electrical apparatus, you can create a bigger problem if a mistake
Right.
is made with the generator, or there can be bigger ramifications if a generator doesn't function properly. So some contractors, especially if they're very much commercial focused, they're actually doing installation, servicing, and repairing of electrical apparatuses as a part of the day-to-day work, especially if they're working on big box stores, big warehouses, big hospitals, on and on and on, right? Then they're not just doing electrical work within the buildings, they're probably installing major electrical components and apparatuses to the buildings that are key to the functionality of that building. But broadening what we're talking about, particular to your business classifications, are you also want to, as a business owner, really hone in to how you generate the majority of your revenue as a company, as well as how you're going to generate revenue particular to a said contract, and put those thoughts and ideas in one lane, and then put all the other services and things that you want to offer as a company in a separate lane. Because the only thing that's going to be really relevant to the insurance company, and it's going to help you as the business contain your cost, is by honing in on what you really do, and how you really generate revenue, and what class codes are associated with those products or services. Because You do not want to come to an insurance broker or agent and say, I do these 7 things, and now you're hypothetically paying for insurance on several different trades or services. And I'll give you another example of that. I had a client that was once that was a general contractor. Now, they were a general contractor, but they picked up home remodeling jobs here and there, right? Sometimes they were plentiful, sometimes they were not. But in terms of the contracts they had with larger GCs, they were doing framing. So I had to explain to him, hey, let's focus on the framing class code because that's what you're getting paid to do 90% of the time versus the home remodeling jobs that may come along here and there where you're actually subbing out a lot of that work where you're bringing in a plumber, you're bringing in an electrician, you're bringing in a roofer or HVAC guy, right? So you're not doing general contracting work most of the time. You're doing more framing work. So let's keep it focused on framing and make you a framing contractor, particular to your insurance policy, because that's how your business makes the majority of its money versus including all these other components of maybe things that your business is capable of doing, but you're not generating revenue with those other capabilities, particular to your business. So there's no need for you to overpay for insurance, hypothetically, by us incorporating all these other exposures that are not really relevant to the day to day of your business. And that's what I try to really drill down on is let's look at your real exposures. Let's look at what you really do day to day and how you're generating money and focus on protecting that because that's my job is to protect that versus if you have other operations and services that your business aspires to do in the future, great. I'm not trying to step on those dreams, but let's not focus on that right now, particular to your insurance, because if we do focus on that, we're probably incorporating a cost for an exposure that really doesn't exist right now. And although I make my living selling insurance, I'm not in the business of trying to find a client that I can retire off of because I sold them this $10 million policy or something. You know what I mean? So that's just kind of in a transparent way on how I like to do business while also hopefully educating the client along the way too.
And I think it's, important every year, you meet with, your attorney, you meet with your CPA, your bookkeeper, and your doctor, your health checkup, every year have your insurance checkup with you and talk about, where that your business is going, how it is changing. And Carlos actually had a great question. And I think you covered it about, if you're contracting electrical plumbing, how do you specify? Well, if you're contracting it out to that sub, then that sub and that trade needs to have insurance and you need to have proof of that as well. Um, and we can kind of take that offline and want to make sure that we're tracking time correctly and then also making sure that we're covering all of our topics. And we're going to shift into bonding since that's
Okay,
a big question
absolutely.
in this space. And a bond obviously is tied to any taxable money, any government funds that are used for a project require a bond. Bonds are required by state law for all public work projects. If any of you want any light reading, there's a state of Texas government code. We'll send you the link for that talks about it and talks about the state of Texas performance and payment bonds. So there's kind of three big words or three people that are in this agreement, right? That protects three entities: the project owner, right, which and then the contractor, and then the surety company. And three words that we hear all the time are bid bond, performance bond, and payment bond. So you want to kind of walk us through what
Yeah,
those
yeah, absolutely.
three words mean because they're different. And once again, it all impacts the price of the job and your scope.
Yeah, absolutely. So a bid bond is what I usually see as the starting stage
Mhm.
because a company is bidding on a project. Let's just say for the sake of simple math, it's a $250,000 project.
Yeah.
So they're bidding on the project. They need a bid bond. A bid bond is going to require the client to fill out a bid application, a bid bond application, right? The bid bond application is involved to some degree, but not that involved because there's no payment required to apply for a bid bond. The bid bond is just that when it is approved, is just a bid bond. It doesn't really turn into anything that's substantial until it becomes a performance bond. It becomes a performance bond assuming that contractor won the bid. So I think that's very fair of the surety company because they're going to give you an approval while requiring you to pay nothing. Now you win the bid, now the bond has to be issued and it's turned into a performance bond. Or a bond can be a contract bond, I mean, a payment bond, like on the previous screen, where that is guaranteeing payment to the parties involved. And those bonds are required depending on, let's call it, if there is a high degree of risk surrounding cash flow or the financing of certain projects and bids on one end or the other, then there could be a payment bond required because of that or the client, let's call it in this case on HISD, we got HISD on the screen. If they know that there are certain economic factors or things going on that make it hard or unlikely in certain scenarios for payment to be made, then they may require certain contractors on the project to require payment bonds for that very reason, right? But I want to move over to explaining what goes into successfully obtaining a bond because that's where I find the biggest gaps in information. So the thing that I always tell clients is when you think about a bond, the process itself, you want to think about buying a home, getting a line of credit, buying a office, a building of some sort, buying a car, because you're going to be approved based on your credit worthiness. Because once the bond is issued, that is a guarantee of money. And the surety company is guaranteeing that money on your behalf to the other party. In that previous slide, it had HISD on the slide, Houston Independent
Mhm.
School District, or maybe Harris County, or maybe City of Houston, or maybe the state of Texas, or maybe, whomever,
Prime
right?
contractor, right? Right.
Exactly, exactly. But your credit score and your credit worthiness is going to be important. Your banking relationships are going to be important. Um, all of these things that are financially related are going to be very important. And depending on how much the bond value is or what scope of work the project entails, some of these boxes on the screen will be more relevant than others. But these are just examples of things that surety companies are evaluating when you fill out the bond application. And again, depending on the type of bond you need or how large or small of a bond you need, the bond application may be little or to very involved in terms of the amount of questions. Um, Flip to the next slide for me, please, Julie.
Mhm.
And then the other thing that can be very other qualifying factors can be things such as life insurance. Because if I'm the head of a contracting firm and we're grossing, let's just call it $1 million a year, if I'm kind of the nuts and bolts behind getting a lot of things done, even though I have staff members that I delegate things to, the surety company may want to say, hey, Mr. Boyd, how much life insurance do you have on yourself? Do you have life insurance? Because we know if this project gets underway, and let's say it's a 16-month project, and you pass away 6 months in, well, this whole project could fall apart because you're no longer around to be the glue to hold everything together. Even though you have staff and personnel, they don't necessarily know what you know, or they may not have the expertise that you have or the connections that you have to get things done. The other thing on this screen, prior bonding experience. That also does help because if you can show a surety company, hey, in 2022, 2023, we successfully purchased a bond, completed the project with no issues and hiccups, and then moved on to the next thing. That's a great sign because the surety company does not want to have anyone ever, what they say, call on the bond,
All
where the
on, ugh.
money has to be paid over and handed over to the other party. So having prior bonding experience is also something that's very, very favorable when you're applying for a bond. But to tie a bow on this, I just want to make sure I emphasize to everyone on the call, buying a bond is not anything like buying insurance. It's nothing alike. It is very, very much focused on your financial standing, the cash flow of your business, your credit, your work performance, your bonding experience. All of these different things go into it. And here's the other thing: bonds are only purchased when necessary. So I also want to make sure I emphasize that to the business owners on the line on the call today is that you don't need to make top of mind. I need to go out and get a bond for my business. You only need to go out and get a bond for your business if you're bidding on a project that requires a bond. You can be in business week to week, making money, completing different projects, signing contracts, and doing all of this great stuff. And a bond may not be necessary for whatever reason, but you may come as you scale and grow your business to where a bond is very much necessary. So I hope that this information helps you understand kind of where what you're getting yourself into as a business owner if you should apply for a bond.
And I think maybe one of the action items, from today is if you're interested in doing government contracting, reach out to you and see, what that
Yeah.
bonding capacity looks like because I've been working with business owners on opportunities either with a prime contractor or straight with an agency, and it's 2 days before the proposals due and they're like,
Mm,
oh, I haven't gotten my bond yet. And it's
yeah.
like, well, that is one of the things that as soon as you get an opportunity or want to start working with the prime contractor, what is their bonding requirements and understanding, what your bonding capacity is. Because, like you said, to get a bid bond doesn't cost anything. And if you go to a company and they say, okay, you know, I'm going to charge you just to see that, then that's probably not the right partner that you want to be with. And so each government agency or prime contractor will say kind of what their requirements are, and we've kind of got some examples here. And like for Manhattan, they want a letter from the bonding company, explaining the project. And so these are project and price driven back to scope. But starting that process and understanding and going through it the first time, so then when you need to go through it again, definitely helps, right? It's like riding a bike. Um, Curtis wants to know a new company scenario for acquiring a bond.
Well, here's the other thing too. When you're talking about purchasing a bond, the reason why I liken it to purchasing a home or a business, because a person may not be ready to purchase a home or may not be ready to purchase a business. To purchase a bond, your business has to be ready for it.
Mhm.
And most new companies, just to be candid, are not ready to purchase a bond. Um, so purchasing a bond, it's typically not one of the first steps I think a business needs to take. I think a business needs to take the step of getting insured long
Right.
before they get bonded, because at least on my side of the table as an insurance broker and the clients that I currently have that are working with some of these larger construction firms all around the Houston market, and I'm not going to name any names, they're not primes and they don't have to carry bonds in all of those instances, right? So sometimes they're getting bonded underneath the prime in certain specified programs that the primes have because these primes, which are these large construction firms, are multi-million dollar, multi-billion dollar firms. So they're bonding their subs through those programs in certain unique ways. But I've never seen any of them cover your insurance though.
Yeah, no, exactly. Yeah, they'll
So
help cover your bond, but they won't help cover your insurance.
yeah,
And one of the
yep.
things, when you're filling out your bond application is financials, right? So
Right,
you're back
right.
to kind of your question, Curtis, with the new company starting. One of the things
Oh,
that you
one
have to
more thing.
provide is your P&L, your balance sheet, and your statement of cash flow. So it's maybe not a thing that you have to do today right now, but as you're projecting that the strategy growth for your company, and then reach out to the people that you want to do business with that are your target clients and ask them those questions. What is the minimum bonding capacity? Or like Brendon said, some of these huge primes, depending on your scope, won't require a bond. So
And,
it's a
and
conversation.
And the other thing I want to mention real quickly, you can get pre-qualified to know your
Yes.
bonding capacity. Um, I do free 20-minute discovery calls, as I call them, to discuss all things insurance and bonding with business owners free of charge. So I'll give you my 20 minutes uninterrupted, right? And we can talk about that stuff all day long. But you can get pre-qualified to find out your bonding capacity long before you actually need to or want to apply for a bond. So I want people to know that too.
Yep. And I think that's what I was trying to put in the chat that I put earlier is,
Okay.
what are your action items is to know what your bonding capacity is to
Yes.
go through that
Yes.
pre-qualification process. So you know where you are right now, where you need to be, and then you'll leave the conversation with, okay, these are your action items, and then you can come back to Brendon. Yep.
Hmm.
Perfect. Perfect. So we're wrapping up. We've got a little bit of time left. Are there any other questions on the content that we've covered, that we either need to go back and show a slide, or discuss? Um, want to just make sure another tool in this space is a capability statement. And on your capability statement to communicate your risk mitigation strategy, you want to make sure to put your insurance, right? Your insurance coverage, which you'll get from your certificate of insurance, as well as, what your bonding pre-qualification levels are. So here's an example here of Greg with Honesty Construction. We've got his insurance, and then we also have what he is pre-qualified for his bonding capacity. So as we wrap up, maybe a few closing thoughts, Brendon, on how to make sure that you don't outgrow your policy.
I would say having those annual phone calls with uh, with your insurance broker agent is the best way to not outgrow your policy because in doing that and having those conversations, you can find out or discuss with the agent or the broker if you're diversifying your services or products, because that may mean that you need to adjust your insurance accordingly. So that's one way you don't outgrow the insurance policy. And also identifying and having those discovery conversations around your insurance exposures in general, where if you have stepped it up in your business where you're using a lot more technology, you're a lot more paperless, right? Then that may be a good time to discuss cyber if you don't already have that or haven't already discussed that, right? Um, so that's just some ways to not outgrow your policy because your insurance policy is covering you and it has all your products and all your operations in a box. And if there's a new operation that you have, whether it's a new product, a new service, you got to move it in that box. But you can only move it in that box by having that conversation with the insurance company about, I also have this going on. And it may be something simple where, hey, we can add that in there, no additional cost, or we do need to add it in there and there's going to be a small cost. Or it may be something that is very, very different from your previous operations that we need to cover this under a separate policy. Because I've had that happen where a business owner is doing something specific to a trade, plumbing, electrical, HVAC, right? But now they're doing something else more in the consulting world where that's very different, right? So that's how
Yeah.
you don't outgrow your policy by just having those conversations with your agent. Oh, there's something I want to correct. I want to put my correct number in the chat because it looks like it
Oh,
got put in there, but
I
it
did
was the wrong number.
I'm so sorry.
I think it was off by a digit.
281. I apologize. Um,
Yeah, I think sent it. Okay, I sent it to you guys as the panelists. You can just put it back out to everybody. It was just that one
281
digit off.
372 6295.
Yeah,
I
6295.
apologize.
Yeah.
You'll get all of the contact information in your follow-up email. That's my error, and I apologize. I was typing so fast to make sure that they got your
It's
contact
all right.
information. So we're wrapping up. Thanks everyone for joining us. Just a few, next steps. And as I put the link to these next steps in the chat, we'd love for y'all to, chime in and let us know what you got out of today's session, or if there are some very specific steps that you're going to take to make sure to have your company grow strategically, as well as making sure that you're mitigating all of your risk and taking care of your company, as well as your employees and your contractors, right? Because everybody is all together to make sure that we're all successful. So if you don't mind going ahead and putting one of the things in the chat that you got away that you got from our time together. Those are the links for the questionnaire. We've got some other sessions as well. Tomorrow is an in-person session with Houston Community College on how to build your capability statement. Then the following week is how to market it. And then that next day is how to prepare to win government contracts. So lots of other education that is coming your way to help you grow your small business. Like we said, we're small businesses as well. We want to be conduits of knowledge. We want to be a support network to help you every step of the way. Really enjoyed our time together. Thanks, everybody. And if we don't see you in October, we hope that we can see you in November at an event with MD Anderson. 13 of the largest prime contractors in the United States that hold the contracts with MD Anderson are going to be there.
Pancakes.
They're looking for small businesses. We're going to have matchmaking, we're going to have education, and of course, we're going to have pancakes.
Love pancakes.
Yes, got to have the pancakes. Yes, Lamarcus, I am going to put those action items in the chat again. We'll stick around for a few extra minutes. If anyone has a question that they came today to make sure to answer and we hadn't had a chance to get to it yet, or if you'd like us to go through another topic, once again, I'm Julie Hartman with B2G Victory. Our subject matter expert today was Brendon Boyd with Tower Insurance, and we were talking about bonding and insurance basics. And thanks so much for joining us.
Thanks, everybody.
We appreciate all of the positive feedback and positive comments. And thanks again. We'll see y'all soon. Take care.